Hey everyone, today, we're diving into a topic that is very important. Mortgages. Understanding this can be your secret superpower when it comes to buying your first house or even helping others make better decisions. Before we proceed, please note that the information provided in this video is for educational purposes only and does not constitute financial or professional advice. Always do your own research and consult with a professional financial advisor before making any investment decisions. So, what exactly is a mortgage? Imagine that a house is a giant pizza, but instead of paying for it all at once, you get to pay in slices over time. That's essentially what a mortgage does. It's like a magic bridge that helps you own a home by paying in parts, not all at once. The basics of mortgages. Buying a house is probably the biggest purchase you'll ever make. It's not like buying a video game or a new phone, it's a whole different level. This is where a mortgage comes in. A mortgage is a type of loan specifically for buying a house. You pay back this loan over time, along with a little extra called interest, which is basically the fee for borrowing money. Let's break it down. Principal. This is the total amount of money you borrow. Interest. This is the extra fee you pay for borrowing the money. Down payment. This is a portion of the house's price you pay up front. Think of it as the initial deposit. How does a mortgage work? Getting a mortgage starts with choosing a house and applying for a loan from a bank or a lender. They check if you're credit worthy. Kind of like how a library checks if you return books before letting you borrow more. There are mainly two types of mortgages. Fixed rate. The interest rate stays the same. It's predictable, like a subscription fee. Adjustable or variable rate. The interest can change based on market rates, kind of like how some phone plans change prices. Why mortgages are important. Owning a home isn't just about having a place to live. It's about making an investment. Over time, most houses become more valuable, and that means you do too. It's like buying a collectible item that increases in value over time. Renting, on the other hand, is like paying for a movie streaming service. You enjoy it while you're subscribed, but you don't own anything in the end. Potential pitfalls. Let's dive into some tricky parts about mortgages that can catch you off guard if you're not careful. Understanding these potential pitfalls will help you make smarter decisions and avoid common traps that could cost you a lot of money and stress in the long run. 1. High interest rates. Imagine borrowing a book from a friend, and when returning it, your friend asks for 2 more books as a thank you. That extra book is like the interest on a loan, but with mortgages, you're dealing with money, not books. Sometimes, interest rates can be really high, making the total amount you have to pay back much bigger than the amount you borrowed. This is why it's super important to shop around and find the best deal possible. 2. Hidden fees. Mortgages can come with all sorts of extra costs that aren't always clear up front. These hidden fees can add up. There are appraisal fees, closing costs, and possibly private mortgage insurance if you don't put down a big enough deposit. Always ask questions and make sure you understand all the fees involved before signing anything. 3. The dreaded down payment. Coming up with a down payment can be tough. It takes time and discipline. Most mortgages require a down payment, which is a percentage of the home's purchase price paid up front. The bigger your down payment, the smaller your loan, and the less interest you'll pay over time. However, saving enough money for a down payment can be a big hurdle for many people. 4. Variable rates can adjust up. Some mortgages have adjustable or variable rates, meaning the interest rate can change over time based on market conditions. It's like riding a roller coaster. You might start with low rates, but they can go up, increasing your monthly payments. While these mortgages can offer lower rates at first, it's a gamble because you can't predict how rates will change in the future. 5. Long-term commitment. Taking out a mortgage is a bit like getting married. It's a long-term commitment. Most mortgages last for 15 to 30 years, which is a significant portion of your life. This means you need to be sure you can handle the monthly payments for the long haul, and you need to think about your job stability and if you plan to stay in the area. 6. Risk of foreclosure. If you're unable to keep up with your mortgage payments, the bank could take back your home in a process called foreclosure. It's the financial equivalent of striking out in baseball. You lose your home and damage your credit score, making it harder to borrow money in the future. That's why it's crucial to only borrow what you know you can afford to pay back. 7. Property value fluctuations. Just like the stock market, the value of your home can go up and down. If the value of your home goes down significantly, you might find yourself owing more on your mortgage than your home is worth. This situation, known as being underwater, can make it difficult to refinance your mortgage or sell your home without losing money. Tips for avoiding these pitfalls. Do your homework. Research different types of mortgages, compare rates, and understand all the fees involved. Budget wisely. Make sure you can comfortably afford your monthly payments, even if your financial situation changes. Save for a bigger down payment. The more you can put down up front, the better off you'll be in the long run. Consider fixed rates. A fixed-rate mortgage might have a slightly higher rate initially, but it offers peace of mind because your rate won't change. Plan for the future. Think about your long-term plans and whether you're likely to stay in your home for a while. Emergency fund. Try to have an emergency fund in place to cover your mortgage payments in case of unexpected financial difficulties. Conclusion. Mortgages might seem complicated, but they're just a tool to help you buy a home. Like any tool, you need to use them wisely. Understanding the potential pitfalls and how to avoid them can make the process much smoother and less stressful. Whether you're buying your first home or looking to move, knowledge is your best ally. So, take your time, ask questions, and make informed decisions. Happy house hunting! And that wraps up our journey through the world of mortgages. We've covered what mortgages are, how they work, the different types available, and the potential pitfalls to watch out for. By now, you should have a solid understanding of the mortgage process and feel more confident about navigating it. Remember, buying a home is a big step, but with the right preparation and knowledge, you can make it a successful and rewarding experience.